Stick around for this video, and I will show you how low interest rates can increase your buying power and help you build equity faster. Hi, I'm Charles Lewis. I'm a realtor here in the Austin area. I help people all over this ever-expanding metro area buy and sell houses. If you take a quick minute and subscribe to my channel, be sure to click the notification bell. That way, you'll get a notification every time I post a new video. Today, I'm going to show you how low interest rates can increase your buying power and help you build equity faster. If you take a look at this chart, you'll see that if mortgage rates went up by 1 percentage point, you would need to decrease the price of the house you're buying by 10% in order to keep your payments the same. Of course, the opposite is also true. If interest rates went down by 1 percentage point, you'd be able to buy a house that was 10% more expensive and still keep the same payment. Now, a year ago, interest rates were at historic lows, but with the pandemic, the economic downturn, and everything that's happened this year, today they're even lower. And as we've seen, a single percentage point decrease in the interest rate increases your buying power by 10%. So in other words, low interest rates means you can afford more house. There are a lot of numbers here, so let me walk you through it. The first scenario is a 30-year loan for $400,000 at a 2.75% interest rate. Your payment is $1,633, and we'll assume a 4% annual appreciation in the home value. On the top line, you'll see that over time your mortgage balance goes down, and the second line is what I call the loan equity. Even if the value of the house never changed, you would still be building equity because you're paying down that loan balance. The third line is the increase in the home value over the 5 years. And the fourth line is your home value equity, which is the home value minus the loan balance. The bottom line is the combination of the loan equity and the home value equity. Now, the second scenario is what would happen if the interest rate increased to 3.75% and you weren't able to qualify for a higher monthly payment. In order to hit the same payment, you would need to buy a house that was 10% less expensive to get you to the $1,600 a month payment. If you take a look at the bottom right number, your total equity after 5 years would be a little over $113,000. And that's over $20,000 less than the equity in scenario 1. Now remember, in both scenarios, you're paying the same amount every month. But with the lower interest rate, you would build equity faster. The third scenario is if you could qualify for a higher monthly payment with the higher interest rate. You would be buying the $400,000 house, but because the interest rate is higher, your payment goes up to $1,852 per month. At the end of the 5 years, you would have $7,000 less total equity than in scenario number 1. But remember, you've been paying an extra $219 every month for 5 years, which is a little over $13,000. In other words, for an additional $13,000, you would still have less equity than you would at the lower interest rate. Now, one of the most important things to understand is that interest rates cannot and will not remain this low indefinitely. Take a look at these historical rates. The math stays the same. If the interest rate is 4 times higher, you would need to reduce the price of the house by 40% to keep the payment the same. To put this in perspective, if you financed a $400,000 house at a 12% interest rate, your monthly payment would be a little over $4,000. And that's just the principal and interest. If you finance that exact same amount at today's rates, your payment would be a little over $1,600. This truly is a once-in-a-generation, maybe once-in-a-lifetime opportunity to maximize your buying power. Well, I hope this was helpful. Remember, if you're thinking about buying a house, there will probably never again be a better time to do it. If you have any questions at all about buying or selling real estate anywhere in the greater Austin area, please don't hesitate to reach out. Click the link below to set up a conversation. If you prefer, you can shoot me a text or an email or call me directly. I'm happy to help. If you finance that exact same amount at today's rate, your payments would be about a little... A year ago, interest rates were historical. A single percentage point will 4%. One of the most important things to understand. All right, let's go.